Want a simple way to spot market trends and structure without the noise? In this video, I'll show you how to use line charts to easily identify key swings and internal structure, perfect for traders 50 plus looking to simplify their strategy. So let's look at this current move in price. Now, not all charts are going to look as clean as this, but it's a great example to show you the two types of structure. So we can see the market has this push to the upside, a pullback, push to the upside, a pullback, another break to the upside, a pullback, and now we're starting to head higher. So you can easily identify where we have that break of structure to the upside. This is without using price. Nice and clean, no noise on the chart, no wicks, just this simple line chart. That's showing you that longer term swing structure is bullish in the market. So all you have to do is to identify the two types of structure here is we now know what we're bullish with that swing structure. And if I just mark off some structure breaks, remember this is understanding the close price, not using those wicks. Once you understand the difference between the two, the line chart will become much easier to understand. So when we see this breakout and we start to see price pulling back, okay, and even this current one and this previous pullback here, let's go closer into price on the line chart, should I say, not price. But here, when we start seeing price pulling back, you start to see the line chart making lower highs as we continue to drop. We can understand this is our internal structure, and we can mark this out with a dashed line, and we can start to see where the internal structure is bearish. Now, of course, we can look to trade these bearish moves as the market pulls back, understanding the use of multiple time frames. Now, doing a multiple time frame analysis is key to understanding this, and that's what it's all about, using two types of structures. Now, of course, if you want to take your structure even further, I do suggest checking out that playlist that goes through market structure on the channel. It's going to help you, especially if you're struggling in your 50s, to master this concept. So when we do pull back down here, we can then look for the last lower high. So the market continues to make lower high, lower high, lower high, and then we break bullish. That shows me the market is now pushing to the upside. And that's going to give you, okay, a potential area. Understanding the line chart, look at how we have these strong moves to the upside here. Okay, you can see these big strong moves. That's going to leave behind what we call an area of imbalance. And we're also going to have the origin of the move down here, which is going to be a pivot or a range area of demand. Now, if you want to learn more on imbalances, then I do suggest watching the playlist in the channel as well. After this video, goes through everything in imbalances that you need to understand. Now, if we just go back to price, you're going to see how we can identify the imbalance. It's this candle here which actually pushes away and leaves a gap. After this candle's closed, let's just zoom into that candle. Right here, we have the high of this candle to the low of this candle. We're left over with this imbalance in the market. And that's where we have blocks of orders left over that will need to be picked up for the market to run higher. Now, this is the origin move, and we also have down here what we class as a range area. Okay, so this is a range area of demand, which is likely for price to come back into as your origin zone, and we have this imbalance left over. So that's more of the swing, because if we go back to that line chart here, we can identify this is a swing move to the upside, and you're looking for that pullback to where? Well, we just mark this out. Where does it come back to? It comes back to that imbalance. And if I just place price back on the chart, we can also mark out this range area here as well, which is our range area of demand. You can see that the swing move comes back into that imbalance and into the demand. But it's the imbalance which is the important part. We have orders left over within this imbalance and within this demand. We see the push in. And if you understand sweeps in the market, we have this sweep run at the low. But we're going to go off the line chart, understanding our structures here. So our structure on our swing is this move to the upside and our pullback. Then we have our internal structure. So we have this as our internal structure, okay? This is our pullback of our internal structure. And once we see the market pushing out here to the upside, let me use this here, once we see the push down, pull back, and the push out, that's going to give you, okay, a shift in internal structure. Not our swing structure, but it shows you the end of the pullback of the swing structure when we see the shift here of that internal structure. This time it leaves our area of demand and our imbalance, and we break to the upside. So when the market has to come back again, these are going to be the areas you want to watch for your potential setups and your entries. So understanding our structure now is what we're talking about here today. Once we see the market breaking this high, that's a break, okay, of swing structure, and it gives us that new swing move to the upside. And we even have within this move, I can mark these out, we have internal structure to the upside. Now you can identify when that shifts back bearish. Very easy, okay? There's your swing move up. There's our internal shift bearish. So this shows me that the market is now going to start its pullback from this high for this full swing pullback. So understanding your two types of structure here is very important to help you to understand, to read the market direction. Now, obviously, this is taking away all that noise with price, with those wicks in the market. If you struggle to read price in that way, then use the line chart. Simplify your trading. Make it easier to understand and to read. Now, if you want to understand more about the use of supply and demand, right now, the Profit Per Trade workshop is on a discount. It's only £49. If you want to take your supply and demand further, I do suggest checking that out. I'll leave it linked above now for you to check that out. But reading your structure here, let's just go back in and we'll carry on with this internal structure. As we see it continue to break to the downside, you follow the internal structure as we move lower. So we continue to be bearish here with the internal structure until we get where? Back into this imbalance and this area of range demand. So once there, what's going to show you, okay, the reversal? Understanding internal structure, we have to see the break of this swing high because it's our internal move to downside. Once we broke to the upside, that gave us a new bullish internal structure, which shows us the continuation of the swing move. Now, hopefully it's starting to give you some light bulb moments. If it is, drop a comment down below. Let me know you're 50 plus, and this is helping you to understand the use of the two types of structures with the swing and the internal structure, with simplifying the process with the use of the line chart. So right here, once you've seen this break up, now you can look for entries down here and I'll show you how we can do that in a moment. But once we see this break up again, what do you see? A strong push to the upside. What would you expect to see like we saw here and here? We're going to see one of those blue candles. And there we have another blue candle where we have our area of imbalance. Now this time we can see a push up and we pull back in, where this area we actually just pushed away and we had to have a swing pull back to that area. And it's in this area here. We go back to the line chart because it's all about the line chart. We can see the pullback here on this move. If we drop down to a 15-minute time frame, in fact, let me just mark that off first so we know where we are. 15-minute time frame on a pullback into this area is going to give us an indication. So we zoom in. Now it's going to be a lot more noisier. The line chart will not be as easy to read, but the idea is we're just looking for it to pull back within this zone. Now I can straight away identify inside this zone, around the 50% area, we have this level. Now it may look like we didn't get to that level, but I'm pretty sure you're going to find there was a wick perhaps in here to run this low. We can identify that this low here was pushed and closed through, so it's no good for potential liquidity sweep in the market. And if you want to learn more on liquidity, again in the channel there's a full playlist that goes through understanding liquidity. So at this point, when we actually look at this internal structure here, and I'll show you again, I'll go through this, we can see this is our internal move up, small pullback, continuation, and then we have this lower high formed and we start to push to downside. Okay. Hey traders, we'll go back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. So looking at a bigger swing on a pullback, you can identify this is a larger swing where we drop down and we break out, pull back, and then we continue higher. But we also have that smaller swing within. But if we mark off the last break of this move as we drop into here, that's all we're really concerned about, is pulling back to that imbalance. This is where I'll be looking for the market to push in on the 15-minute to run a swing low for potential sweep to go high again. And once we see the market shifting, okay, this V-shaped pattern we can see here, we can then look down on your 15-minute price chart, take an entry on a bullish engulfing, as we can see here. Okay, it engulfs the previous body of this candle, and we also sweep through, okay, the low of this move on this closed price. Now we can also put the low of that candle, we can see we actually just swept it. And where are we sweeping into? Another bullish imbalance in the market. But it's right here where we look to take your entry. Okay, so you can take an entry on the close of that bullish candle, and you can either look for a first target, take some risk off that trade, and then eventually what you're looking for is for the high to be run of that actual daily move. Just mark this off, and there is a over 7 to 1 risk reward if we hit that high. Let's see if we hit that high. Okay, so you can see we hit that high. And that's a simple way of looking at your structures using, okay, the line chart. Back to line chart, we can see where it continues to be bullish. You can see where we continue to make those larger swings and those smaller internal swings within. But the higher time frame, the easier and the more simplified it'll be for you to look for those entries. Look, we just used a daily imbalance zone to look for the pullback within on the 15-minute. We went down, we looked for a potential sweep reversal out, and that's where you can capture a trade. So obviously, if you want to learn more on that, like I said, it's inside the channel. Please check it out after you watch this video. Now, if we look at this area as well, what we need to understand this one is, go back, this is a full swing pullback into this area. So what we need to do is we actually need to look at what happens down here on a lower time frame. So we go to a 4-hour here. Let's go back to that area because this is a full swing. Okay, we need to see what happens on a higher time frame. We're looking for a higher time frame to show us a potential shift out, and we get this shift where we see this 4-hour pushing down on a break of structure there, and we shift back out bullish. Now, what do you think this is going to show you now on a 4-hour time frame, this push up? If you said a blue candle, then you're going to be exactly right, because there we have another bullish candle to the upside, leaving another imbalance zone. So when we come back into this area, once again, what can we do? We can go back to our line chart. We can go to our 15-minute chart again, and we'll go into this area. So let's just go into where we see the market, okay, pulls back this time into, okay, this area of the 4-hour. Okay, this is our daily area of imbalance where we see the 4-hour reversing out. Now, again, we're waiting for this to come back in. We're not looking for a trade until you see it pull back in. Now, understanding your structures again. Okay, we know on the structure on the 15, we get the breakout, a breakout, breakout. There's a high, we get a reversal, we pull back into, okay, this imbalance. So if we look at the internal structure now, that's what we're looking for. That's our key for a reversal out. This is actually one big swing pullback we can see as well. Where do we have? Well, we have this internal break to downside. We have another break to downside, and then we shift bullish here. This is what we class as our confirmation entry, a reversal out of this imbalance. And right here, I know we'll be able to mark out an area of potential demand where we see that reversal out. Now we're going to have a target where you can target for these highs, and then you can look to hold it onto where? Okay, well, you can look to hold it onto the swing high here, where we see the daily, or for this daily swing high. So if we now look at price, we'll go down again, we'll mark this out. This will be your entry. Okay, these are not going to be typical entries all the time, but this is where you'll be looking for your breakout on that candle. You can either have an entry on that candle there. We just grab the tool, or you can look for a pullback to the demand. And again, this would be an area of demand. Stop with the low of this low, and you can take a first target here, a 2-to-1 risk to reward. And then what you can look for is you can hold this, okay, because you're looking to go with a daily swing at this point, because we know bullish because we're reversed out on that structure on the 4-hour time frame, reading that line chart. So we're now bullish on a 4-hour, reversing the daily pullback swing. And obviously at this point, when we break this level as well here, we now have a valid daily reversal of internal structure as well. So once you got your first target, you're kind of like risk-free. And now you can aim for this high. Now, I'm not saying you're always going to be targeting for those swing highs. You may have said, okay, I'm happy to get out at the daily internal high, which would have been just what? You'd have had a 4-to-1 risk to reward. It's still a great trade. But if you're going for that swing high on the daily swing, you've then got a 17 or just over 17 risk to reward. So, and again, some people might say, well, that's not your typical trade, but it can be if you're trading with, okay, the daily swings. And that's how you look at using those imbalances when you're looking at the use of these structures on the line chart. And again, if we just go back to that daily, all of this starts, bring it back for you, it's just reading these swings. So there's your swing in the market, there's your pullback continuation. And it's just reading the structure. So all you've got to do, once we start to see this is bullish, let's read this structure from here. We continue to be bullish. We have a break to the upside. What does this show you? When you see this break here to downside on the daily, that's showing you the start of the pullback against this move in the market. Okay, now if we look down here, again, if we go back to the price, what do we have? Well, this has already been tested, okay? So we're not likely to come back to this now after we tested it. This was a fresh zone. We do have this as a fresh zone above that level where I was looking for potential pullback too, okay? But what we have to look at is as the market pulls back, let's just go back to that line chart. You have a bearish bias here. Now this is a internal shift lower, and then we went bullish here just on a swing, internal swing here. You see, this is more of a swing, but this is your full, this will become, sorry to say, your potential swing pullback continuation here. But your internal structure is where we see the market coming up. We then shift back down again, and then we have this small break to downside and a break back higher. So at this point here, so when we see this shifting back bullish, and again, what we have, a strong push up. Is that going to be another blue candle? Yes, it is. So that leaves you your area of imbalance. Now, we never came back to that imbalance at this point in time. So it's still a nice origin area of imbalance. And we can also see that we had that shift back to line chart where we can identify the close prices. It's going to help you to simplify the process. But we can see that at this point, we're bullish again. Okay, so once we see this close up, we could go down to a 4-hour time frame and we can look for the 4-hour to start showing the swing pullback. Well, there's just a single swing pullback. So let's go down to 15 again here. Okay, so we can see now on a 15, you can read it where the market starts to make this break lower and we break out here to the upside. So you'll be looking for some kind of pullback into an origin area. So it goes back to price, and there is an origin area of demand. Where did it come back to? It comes back to the demand. Where did we bounce off? Okay, off the imbalance. This is the key part. And again, when we're looking at this, look, you've got an entry you can take. Let me just place this entry on the chart again. From this point, you can have an entry, okay, you stop at the low. You can have a first target again if you wish above these highs. Okay, so nearly 3-to-1 risk to reward, and then you can hold if you wish for this high. Why? Because at this point, Let me just put the line chart back on and back onto the daily. At this point, we are taking an entry and we're bullish because we broke this internal structure. So that's the key thing to understand, that the internal structure shifts bullish, and then we go down to the 4 hour. The 4 hour is also bullish as we shift swing bullish. This is a pullback on a 4 hour on a 15 minute, and that's your entry. And again, look at the profit once again. You've got a 12-to-1 risk to reward taking a trade like this. You're going with the 4 hour structure. You're going with the reversal on the daily. You are going with the directional bias on the higher time frames, understanding the structures, okay, with the swing and the internal structures, using this simplified method of the line chart. I really want you to use this to master how you can use a simple method to help in your trading. Like I've said throughout this video, there are plenty of playlists throughout the channel to help you further develop this, especially market structure and those imbalances. And if you want to take your supply and demand even further, do check out that Profit Trade Workshop. Like I said, it's only £49 right now for the full course. I don't know how long I'll keep it at this price. So if you want to check it out, there'll be a link at the end of this video. And make sure you go and watch the next video. Okay, it's going to help you to progress as a trader in your 50s to simplify your trading.